Hey, Forex Trader, this is Dr. Barry Burns with Top Dog Trading, and today I'm going to show you a little trick that a lot of people don't know, and that is about support resistance levels that work extremely well. And they are called floor trader pivots. Now, here's the little secret. Lots of people know about floor trader pivots, but they were originally created for the futures market, and they work very well there. What a lot of people don't understand is they also work very well for stocks and, for our topic today, spot Forex. So there's a lot of spot Forex people that don't understand that those floor trader pivots actually provide significant support resistance very often on the Forex market. And if you have these on your charts, you might get an advantage over some other traders, seeing things that the other people, for example, the guy on the other side of your trade, may not see. So let's go into it here and show you exactly how this works. So first of all, the floor trader pivots are just a very simple calculation based on yesterday's high, low, and close. And you put them into the little mathematical formula, and it spews out these support resistance levels. So here we go. Now, some of these little letters are overriding each other. That's because we have clusters. When you have clusters, that's even better. So here's yesterday's low. Okay, that's the red. And here is yesterday's close. And here's yesterday's high, YH. So the Y stands for yesterday. Now, what's interesting, it's I got that covered up a little bit. But here's your main level, the pivot point, the central pivot. So once you put those three things into the mathematical formula, and by the way, there are free calculators online where you can go ahead and type in yesterday's high, low, and close, and it will give you these levels. So here's a couple of those websites for you. However, before you go to those, I would suggest that you see if your charting platform actually has an indicator that will plot these levels for you automatically. Mine does, and there's many of them who do. So check your charting platform. If you're not sure, call your help desk and ask them. So the point of balance of power, however you want to call it, that would be your pivot point, PP, or sometimes they call it central pivot. Anything above that's considered bullish, anything below that is considered bearish. Then what it does is it draws resistance lines above that and support lines below it. So for support lines below it, we have S1, support 1, S2, support 2. And these numbers are just the level where the line is. And here's R1. So that's resistance 1. And they don't always cluster like this with the previous day's close and high and low, but this day they did. So that's fine. Now, here's another little tip that a lot of people don't do. Even if they do use the floor trader pivots, very few people use what I call mid pivots. And a mid pivot is, for example, there's a mid pivot, okay, R1 and dash the power or the pivot point. So all that means is very simple. It just means between R1 and R2, I'm sorry, R1 and pivot point, actually it works to the upside as well between R1 and R2. It's a 50% distance between there. So the halfway mark between, in this case, pivot point and R1, you have your mid pivot. Very few people use this, and there's a time to use it and a time not to. The time you don't want to use it is when the previous day was a narrow range day. The reason being that all your lines will be too close together. This is a great thing to do when the previous day was a wide range day and there's a lot of distance between your pivot point, your R1, your R2, your S1, your S2, because the market really does go to these levels. So this is a huge clue for you. By the way, I did a video just on this topic. So here's the URL. It's on YouTube, and you can check that out for free after this one. Okay, so now let's ask ourselves, does this provide any meaning? Does it really work on spot Forex? So the answer, of course, is yes. So here we go. We open up in here, and we open up right at the neutral territory. Yesterday's close and the pivot point are both considered neutral territory. So we go down, and where do we go? All right, boom. We go right down to yesterday's low and S1. Then we come back up after that, and where do we come back up to? The mid pivot. And then we come back down to that level again, but eventually we get all the way down to what? S2. Then we bounce up to the mid pivot. Then we bounce down to S2. Then we go up to this mid pivot, and then we come back down to S1 and yesterday's low. Now this time we scream through the mid pivot, through the pivot point, through that mid pivot point, and all the way up to yesterday's high and R1. So it's important to acknowledge that these levels do not always stop the market from moving up or down. And of course, it would be ridiculous to think that they did, because if they always did, well, the market would never be able to go anywhere, right? So support resistance is broken all the time. And it's not really the topic of this video, but a couple clues on how to determine whether the market's likely to break through support resistance is this. Number one, acceleration, momentum. And that's what we've got here. This is a very strong move. 1, 2, 3, 4 bars, and it breaks through all of these. It just slices through them even. So that's number one. Number two is cycles, timing. So I'm looking at, are we coming into a cycle high when we reach this level? It's the confluence of price and time, as W.D. Gann used to talk about it. So if we don't have a cycle high here, I don't expect the market to hold that resistance. Same here. Do we have a cycle high here? No. Do we have a cycle high here? No. Do we have one here? Yes. Now, you say, well, Barry, how do you know that? Okay, well, that is based on my cycle indicator. So I don't have it on here because it's not really the topic of today's video. I just happened to think about adding this little extra tip. So what I'll do, though, is here's my email address. And periodically, I offer a webinar where it's a free webinar, by the way, where I give you that cycle indicator for free. And it works on most any charting platform out there. And I give you the indicator and I show you how to use it so that you'll know when cycle highs and when cycle lows are coming in to time it. And again, the point is to get a confluence of what? Price. And so price would be like here. That's where you get your resistance levels. And then time. And where price and time come together, that's where we look for cycle highs and cycle lows. So anyway, here's my email address. Feel free to email me asking when the next one is, because people will be looking at this video for years to come. And we'll see if I even offer it in the future. But right now I am offering it as I do this. And the date changes all the time, and I only offer it periodically. So send me an email if I'm making it available. I'll certainly be happy to invite you to it. Okay, so that's it for today. I hope you liked this video. And if you're watching it on YouTube, please click the thumbs up icon below and leave a comment, because those comments really encourage me to create more free tutorials for you, which I really enjoy doing. Also, I'm giving away one of my favorite trade strategies called the rubber band trade that has an extremely high win-loss ratio. It's a simple strategy. You can learn it in about 26 short minutes. So get that video explaining the trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with the circle around it in the top right corner of this video. And once you do that, I'll personally email the video to you.